I was laid off from a pretty well stabilized job because I'm paying interest at 10%, 8%.
And how much was the price for that building?
This was off market. I bought it for 700, 6 condos in River Forest, appraised for 3.2.
What? What's up, guys? Thanks so much for tuning in for another episode of our podcast. Today, we're talking about investing in real estate. We're talking about house hacking, Brrrr strategy, multifamily investing, out-of-state construction, new construction. I have Sean with me today.
Hey, Ollie.
Yeah, thanks so much for coming in today.
Sure.
So, for somebody who doesn't know you, let's do a little brief on who you are and what you do.
Sure. So my name is Shantanu. I'm obviously, from India. I have a, brown and a thick accent. Now, I came to America 10 years ago as, on an international student visa. Came here, did my MBA, worked in corporate for 7 years before I transitioned full-time into real estate investing 3 years ago.
You are an immigrant. You
Correct.
came from India. So
Correct.
does the immigrant have to have money right away?
Oleg, I actually, I don't come from a rich family at all.
Yeah.
And the reason I say is I came to America at the age of 27. So at the age of 27, if, usually in India, I come from, a third world country. Correct. I mean, we are now the most populous nation in the world.
Yeah.
We beat China 2 months ago.
Oh, really?
And, we are 1.45 billion people, billion with a B. So that, the challenge was I didn't have a lot of things in my favor back in India. That's why, 27 is the age where in India, a guy and a girl get married. I chose, to basically move to another country, 21,000 miles. And, I basically had no money at the time. All I had was, $2,000 to survive for the next 30 days. And then I had a scholarship for my grad school.
You don't need the money to invest into real estate.
Yes, a lot of people think and they get discouraged. And I am a living proof that, if I can do it, you guys can definitely do it. This is a land of opportunity.
So what did you do? You were in IT?
Yeah, Indians have 3-4 occupations. One is they become doctors, which is the most, prestigious thing amongst Indians, Indian Americans.
You didn't go after that.
I could not, I was not that smart or sharp to get into med school.
Then you go lawyer.
Now my wife is a doctor. So, I did the right thing. I married a doctor.
Yeah, that's right. So then you have another lawyer, usually.
Sure. Attorneys, CPAs, accountants, that's
then you
another
own Dunkin'
bucket.
Donuts.
Then, Dunkin' Donuts is a big thing. Or we, do gas stations and subways.
Yeah.
I come from the world where, technology and, IT has been a big, thing in our lives. So I am a technologist by training. And, I worked in corporate America for 7 years before I transitioned. I actually was laid off when COVID hit in 2020. I was laid off from a pretty well stabilized job. And, that's how I got into investing.
So what was your first, how did you get into the investing?
So I started 3 years before that. I did a house hack, Oleg, in March of 2018. I got married in Chicago in October 2017. My wife was working in California at the time. I was working in Pittsburgh. Now we both wanted to move to Chicago because that's where my wife was born and raised. And so instead of buying a big single family home with a lot of, newly married couples do, we decided to do a house hack. My first house hack was a 4-unit apartment building in Elmwood Park. This was back in March 2018.
How much you paid?
So I paid a little more, I think, at the time because this
Too much you overpaid?
Yeah, I paid $495.
For 4 units, $495?
Yeah, but this... Good. Yeah, but still, I think, I bought retail. I didn't know much about investing, Brrrr strategy, multifamily, and, what I do today. I mean, I think 5 years has been a very big transition, from what I did back in 2018, paying retail for a 4-unit property, and what I'm doing today.
So it was 2018. So you was still in IT.
Correct. I was still in IT. Now, another thing was I bought this using Home Possible program. And FHAs and home passable programs are two programs from the US government that wants you to become homeowners.
Yeah.
Okay. And they want you to do multifamily house hacks. So I had a W-2 job. You need to have a W-2 job in order to qualify for these low down payment programs. My down payment in 2018 was 5%. And with, credits, with rent prorations, security deposit prorations, basically I came nothing out of pocket.
Okay, so you came out of pocket. $495 was the purchase price.
Correct.
How was the numbers working on that? They were covering all the payments. Were you cash flowing a little bit or no?
Sure. So when I bought this I bought it from this was an MLS deal. So I didn't know much about off market, wholesales, nothing. This was a turnkey property. The lady had lived there ever since the building was constructed in 1960s. Tired landlord. She was 80 years old at the time.
Yeah.
And the rents were basically half of the market rents. So when I bought the building, I was basically breaking even, with the rents I collected from.
But you lived for free.
I basically lived for free. Exactly. And at the time now, when I say I live for free, now I was paying for the common area utilities. I was paying for the water bill. I was paying for the garbage. I was paying for the electric in the hallways, so on and so forth. But yeah, I was breaking even, to say the least.
Were you happy at that moment, or you said,
yeah,
should have bought something else?
No, I was happy. I think this was a great building. It was, on a double oversized lot, a corner brick building. So, I had a 4-car garage. So it was kind of a unique building. That
You still have it?
Yeah, I still, I never, one philosophy I truly believe in, real estate is a lottery ticket in America.
Yeah.
And once you buy an asset, I never want to sell it because, I don't want to kill the golden goose, as they say.
You see, I'm the same way, but I'm seeing a lot of people selling to 1031 into something big.
Sure.
And I'm looking into that. I'm like, they grew so fast, so much. Is there something that I don't know? Maybe I'm missing. Maybe that's the way to do it. But I remember just getting into real estate investing. I'm like, why would anybody sell the real estate investment, like a rental? Why would they ever sell it? And it's like, why some 1031? Like, why not just refinance, keep it, and move to the next one?
No, that's a great point. I actually, I was part of a presentation on 1031 exchanges a couple of weeks ago. I go to a lot of different meetups. I'm part of different groups, especially for multifamily. The only reason I personally would do 1031 exchanges if I'm selling real estate in one state and buying real estate in another state, because as part of my strategy, I'm basically relocating all my investment portfolio.
Yeah.
People relocate, their primary residence from one state to another. If I decide to go that path, till date, I don't think I want to relocate my investment portfolio. I am at 110 doors
right now
in Chicago suburbs.
Nice. In 2 years?
Almost like, 4.5 years.
Oh, 4.5. Well,
4.5 years.
I mean, in 2018 you started.
Sure.
But how many houses you bought in 2018?
Just
one.
that, that one.
So, okay, we removed the
property.
2018, so we start with 19. How many houses you bought in 19?
So 2019 is when I started doing Brrrr strategy. In Feb of 2019, I bought my first Brrrr. It was a single family home in North Lake. And I wanted to see, hey man, how does this work? Does it actually work? So I bought a house off of MLS, didn't know much, but I bought it. See, the thing is, the reason investing worked for me, I'm good at acquiring properties. That's been my key focus. That's been my key, I drive all my efforts towards, how do you buy a distressed asset? So I bought the property for $95,000 using my own savings. I fixed it up for 20 grand. The property appraised for 200.
Wait, 95 you paid with your own money?
Correct.
With your own cash?
I paid,
and the rehab with your own cash?
Exactly.
Okay, so you have to have cash to do the deal that you did.
Correct.
Okay.
Correct.
But you had the cash, you did the deal, you put in 115, you appraised it at 200.
Exactly.
You pull all the money out and some.
And exactly. That's when I thought, wow, it happens only in America. You buy something for 95.
Was it on MLS for 95?
Yes. It was on the MLS for 140.
But how come nobody, 140? So you
Correct.
you negotiated it down to 95?
these Indians are good in negotiations. So I kind of, I was talking with the agent for a long time, offered him, dual agency, and, it was my first deal. So yeah, I bought it for 95. It's, it's public info. The address is 308 South 44th Avenue in North Lake. I closed on it in Feb 2019. So yeah, 4 years ago. And that's how I got started in investing.
So 2019, how many houses you bought?
So 2019, I bought around 8 houses.
Pretty good. You were going like full time. Is that when you met Andrew? 2019?
I met him in October 2018.
Andrew is someone we did a podcast before. If you don't know, you probably know if you're in Chicago. But if you don't, check out the video. We're going to have in the descriptions too. We did an interview with Andrew. Andrew is your mentor?
Yeah. So I met Andrew and his team in October 2018, I believe. Yeah. And I joined his program in, I think, November 2018. It started, this relationship started as a mentorship, as a mentor. 2 years ago, we decided to go to Florida. Now it's more, intimate. He's like a coach to me, basically. So, yeah.
So in 2019, you bought 8 houses.
Correct. And I did another house hack in Schiller Park, which is northwest suburb.
So you moved from Elm Park to Schiller Park
in a 4-unit building.
In another 4-unit.
Correct. So I did a second house hack in, I think, May of 2019. And I did all these 8 different Brrrr strategy houses. Yeah.
Wow. Okay. So 2020?
2020, again, another a dozen houses along with. Now, what I did was when I looked at the Brrrr strategy, I thought I can do, 8 Brrrrs a year, which is good. Or I could do 4 single family homes and use the same strategy on a 2 to 4 unit building. So what I did in 2020 was I did a Brrrr on a 2-unit property. I did a Brrrr on a 3-unit property. And I did a Brrrr on a 4-unit property in Oak Park. So that's how, I transitioned. And this was my full-time career by then.
Okay. So now, question. Where do you have these buildings come from? What's the lead source for the purchases?
Since 2019, everything has been off market.
How?
Everything has been mostly, through wholesalers, because off market is a big, lingo. But what does it mean? It means either through a wholesaler or I am cold calling motivated sellers. And, or I just find, like a FISBO, FISBO.com, you call the owner.
Yeah, boom. But usually they're overpriced.
Yeah, but you do find, I did now, not now, things have changed over the last 3 years. Yeah. I used to drive a lot. I used to drive for dollars.
Yes.
You would see for sale signs sometimes. And yeah, most of it is overpriced, but you do find, a motivated seller every now and then.
So most of from 2019, you were off market. Everything is off the market. You're not even looking at MLS.
No, I still look at MLS.
You have a license?
Yes, I have been since 2019. Ever since I started, I say real estate is a lottery ticket. Getting access to the MLS is important. And I just represent myself on a lot of deals. I don't, solicit sellers or buyers for their business.
So until like 2020 or something, you were doing single family only?
2019 was single family only Brrrr. End of 2019, I did a 2-unit Brrrr in River Grove. And then 2020, I just went full on. So I did a 3-unit Brrrr, 4-unit Brrrr, and another 8 houses.
And now you only doing multifamily or single family too? Both.
So I do a single family Brrrrs, I do multifamily Brrrrs, and now multifamily is a very broad term. It's 2 to 4 units. Which
I think it's important to say maybe the Brrrr. Maybe
sure.
we're talking Brrrr, but maybe somebody doesn't know the Brrrr.
What does Brrrr mean?
Yeah. So let's touch on that.
Yeah. So the Brrrr is you buy a property, you rehab a property, you rent a property, you refinance it, and then you repeat it. That's
the goal of
Brrrr.
refinancing is pulling all the money out.
And some.
Yes. And then go back and do it. So how are you buying the properties now? With your own money or you're borrowing money?
Not my own money, because it's impossible to scale,
Right.
doing 8 houses in a year with your own money. It's impossible. So I raise capital from investors. I don't give them a piece of equity. I basically, they're private money lenders. So they act as a bank. They get a first lien on the property, and I pay them a fixed monthly interest.
What's the range?
Typically, it's between 8 to 12%, depending on how you negotiate with a private money lender.
Yeah,
It's
and if they know you, they know what you do.
Sure.
If you're good, yeah.
Correct.
And then they loan you also on the rehab too.
Yeah, so it's 100% purchase, 100% rehab, because they look at credibility of the investor.
Sure.
And they are getting, I mean, how much money would you make in a bank account? Not much.
Sure.
Right? How much money would you make in a stock market? More, but the risk is higher.
Yes.
Correct. And stock markets, for me, it's gambling. I don't invest in stock markets. I never did cryptos. I know people who made a lot of money, but I know a lot of people who lost a lot of money,
For sure.
So I, don't go to casinos. That's really not in my blood. So
You got a retirement
in,
fund or no?
Huh?
You got a retirement fund or no?
A 401k fund, but I usually, I lend it to other investors. So I don't really,
I see.
believe in a 401k.
So you also, as a private lender too?
Correct. I do it both ways.
Yeah.
basically.
That's pretty cool.
Yeah.
Pretty cool. So what are your terms like when you're borrowing the money for the private for the deal? You're borrowing for like 6 months, 12 months.
So I do a 12-month deal with a 6 months extension thereafter.
For then the interest, like for example, 10% on a 12 months.
Correct.
2 points up front.
No, I don't do any points at all.
Anything up front.
No. I usually don't do a point up front. I usually do a ticker at the back, which is a 1%, 1 point.
At the back.
At the back end, correct. And that
Pretty
money
smart.
comes from the refi. So it's not the money coming out of my own pocket. It's coming from the closing.
How many deals on the contract you have right now?
8.
Really?
Yes, I have 8 deals. One of it is actually a bigger project. It's 8 condos that I'm deconverting into an apartment building.
Right.
So that's, what that one contract is almost like 8 condos. I have 5 single family homes under contract, which, are in A minus suburbs of Chicago, which I plan to do Airbnb for next year.
Oh,
And then I have, a 6 unit and a, 3 unit in the pipeline.
Oh, nice. I just put an offer on 4 unit with the basement unit. And today they're going to do the decision. There's multiple offers. I have to go over ask. So I don't know, The numbers kind of work, so I'll tell you. 4 units with the basement, $575.
In the city, suburbs?
Suburbs.
Oh, okay. Not suburbs, southwest.
Southwest.
Gotcha.
Southwest suburb, $575 for 4 unit plus the basement, which is not legal unit, the basement unit. The cash flow after all expenses will be around $1,700 a month.
Net cash flow.
Net. Mm-hmm.
After PITI, after all building expenses.
Yes.
And would you hire a property manager or
no? That's not including property management, not including vacancy rate.
Gotcha.
So if you do that, that's going to be less.
Got it.
So, for example, if we just keep it at 1,700, let's do 1,500.
Sure.
That's roughly like 12% cash on cash.
You're buying it as 25% down payment. Got it. Yep.
Would you do the deal?
So I did house hacks. So I would pay, 5% down payment. So my cash on cash would be abnormally high because I go with a lower down payment.
Yeah, but I can't get the down payment that low.
Because you didn't do a house hack 5 years ago.
Yeah, because I have so many loans now that I can only go commercial.
Correct.
If I go with the bank.
Correct. Right. Now, if I were you, I would go to hard money lender. I would buy I think 585 looks more retail to me.
Because that's right. It is. I'm going over.
Yes. I'm in the cash flow business. So in a cash flow business, how it works differently, I buy properties that are mispriced. Okay.
Why do you find these mispriced properties?
Off market.
I gotta go off market.
Right.
Okay. Tell us some tips. How do you find these off market?
So, I still...
the thing you have on I saw your video on the Facebook.
Yes.
You're rehabbing the whole thing right now. Yeah?
Yes.
You're still rehabbing it?
Yes. It's almost done.
Where did you get that?
This was off market. I bought it for 700, 6 condos in River Forest, appraised for 3.2. So there's a huge delta.
700,000.
Correct.
Appraisal 3.2.
Correct. And 700 was the land value. So even when I bought it, I knew I had
What was the problem with the building?
the tired landlord. This was an old, builder. But see, this builder was not financially distressed. He had a business partnership that he was trying to, get rid of. So the two partners decided to sell this property. And it was a pretty nice property, needed a lot of work. I mean,
How
there
many
were
units?
6.
Oh, right. You said 6 units, 700.
Correct. And needed a lot of work. There were 6 non-paying tenants in the building, so that was a big problem. And the landlord said, "Hey, man, that this is what I want, and if you can pay me, I'll sell it to you for 700."
How did you find him?
Cold call.
Cold call.
Yes. So this was a building with a lot of city and village code violations. So
That's how you track him.
Correct. Exactly.
Smart.
Yeah, and it's a lot of different, off market is a lot of different strategies. You can go to different, municipalities, ask them if they have a list of buildings with code violations. There are a lot of different strategies. That's,
So you're looking for trouble, yeah?
Correct.
Basically.
I look for troubled assets, not trouble.
Yeah.
I get into trouble.
That's your full-time gig now. Yeah?
Correct. This has been my full-time gig. How do you find distressed assets? How do you find mispriced assets? And how do you go after tired landlords?
So, okay, let me fast track a little bit. 110 units. What's the cash flow on that?
Once it's stabilized, I'm still working on the 6 unit.
Oh, okay. So,
Correct.
okay, gotcha.
For cash flow today is around 37,000 a month. Net cash flow a month. Once everything is stabilized, I'm hoping around 48, close to 50, because this 6 unit is a big cash flow cow. Then I have another 19 unit in rehab. Hopefully we'll finish it this year in the south suburbs. So once these 2 properties are kind of stabilized, I have few Airbnbs up and going, in the next 3-4 months. Should be around 48, 50.
It's pretty good.
Yeah, it's a long way to go, man. It's a lot of work. I still to date, I work 16 hours a day. It's not easy. It's a lot of work.
Managing a lot of rehabs, yeah? Looking for a lot of properties.
Any given point of time, I have 8 to 10 active rehabs. Even today, I have, around 10 rehabs at any given point.
Are you feeling overwhelmed or no?
No, not at all. See, I love what I do.
Yeah.
It's always been my goal. When I was in technology, I was, always I like fast-paced life. I like to travel. I like fast-paced, lifestyle.
Nice. So it's about 40-some thousand a month.
Correct.
Cash flow. That's pretty good.
Yeah, goal is to get to, 100. It took me almost 4.5 years to get to this point. If I can get to 100 in the next 2.5 years, I think that would be, a reasonable achievement.
So now you mentioned Airbnb. So is that something that you going also like very serious on the air, or just here and there a couple?
Yeah, no, I started 2 over the weekend, over the Memorial Day weekend. I have 4 to 6 more Airbnbs that would be online this year.
Midterm?
Yeah, mostly short term. I have 1 midterm rental. Yes.
A single family house or condos?
No, all of these are single family.
Single family.
Correct.
You don't mess with condos or townhouses?
I don't have any condos or townhomes. The only time I do buy condos is like the 8 unit I'm working on. If I would buy all the condos and then deconvert it into an apartment building. That's the only time I would ever buy condos.
Are you maybe buying those condos that are in Niles right now?
No,
not
Niles,
the ones.
No,
I saw some condos, 9 condos for sale.
In one building?
Yeah, but there's more in the building. There's like 30 or something.
Oh, 30. Yeah. See, to buy, to it's called as condo deconversion.
Yeah.
You need to have at least 51% majority, ideally 80%.
Yeah.
To dissolve the HOA board, and then deconvert it into an apartment building.
No, I get it. Yeah, that's why it's still sitting on the market.
Yeah, and it's not easy at all, but it's very profitable if you can buy all the condos.
I have one condo in the building, 12-unit building in Chicago Ridge. I have one condo, and I mailed everybody that I'm gonna buy you.
11.
I wanted to buy the whole thing, so I gave him the offer. It was 3 or 4 years ago. I gave him an offer of $950 for 12 units.
Wow.
Some were considering. They said too low. And at the time, I bought my condo over there for $60,000. And I'm pricing like, okay, $70,000 for 1 bedrooms, $90,000 for 2 bedrooms, and this is the number. Okay, I'll go up a little bit. And I'm like, okay, that's it, no more. And now looking back, I should have gone even more because I didn't buy it. Nobody, they wouldn't agree. You know, like
Sure.
80% of people would say no. There's a couple that said yes, and so I should have gone much higher. Like that 12-unit building would have been like 1.4 now.
I mean, yeah, especially if it's
If I put it up on MLS, it would.
Sure.
Or just go and refinance, then I should have, you know.
Correct.
So
Bought all the condos.
I should have gone up on the offer because they were all talking. There was all investors. All of them don't live there.
Yeah.
They keep them as a little rentals.
So, Oleg, there's a saying, you don't wait to buy real estate. You buy real estate and wait.
Yeah. See, like I'm waiting on that deal, but I don't know, you know, I'm buying at the retail price. This 4-unit with a basement.
Yeah.
You know, it's a retail price.
Sure. Yeah. See, the only difference is when you buy something at retail, you will have money stuck in the deal.
Yeah.
You know, whether it's the money stuck in the down payment, even if you buy a turnkey property, there is always deferred maintenance with existing apartment buildings. That's the reason I'm doing new construction now in Florida, because I'm trying to build ground up so that A, there is no deferred maintenance at all, correct? B, I am putting all the Kmr&x up front. The investors don't look at the bigger picture. You know, this investing is a long-term game. It's not a 3, 4 year, 5 year game. It's a long term. For me, you know, I have a 2-year-old daughter. You know, for me, real estate is a generational wealth.
Yeah, 2-year-old?
Yeah, 2-year-old.
Mine too, yeah. 2 years.
So for me, it's more, you know, generational wealth. I want to leave a legacy for my, you know, daughter. And, you know, that's why I want to do now new construction in Florida.
So, like, what are you building?
Single family homes. My first project is a small subdivision. I bought a 1.25 acre lot. I'm putting up 5 single family homes as we speak.
How are you financing that?
This is all through, you know, a construction loan. So basically hard money. And, you know,
What is that going to be? Airbnbs?
yes. So this would be, you know, completely all 5 single family homes. It's in one of the best locations in Southwest Florida. And there's a high demand, very high demand for Airbnbs in that pocket of Florida.
So what are you seeing? What are you seeing right now in terms of like better strategy? Buying here as and rehabbing, keeping these rentals, or building there?
Both. See, the biggest thing is when you know, it's now, this is not something that I could have done 5 years ago, obviously, or 4 years ago. When you start building a portfolio, you have to diversify. And when I say diversify, it means 3-4 things. First is diversification into single family homes, 2 to 4 units, and 5 and up. You know, so that's 3 different asset classes for me.
You listen to Bigger Pockets a lot or no?
No, I don't listen much.
That's what that David Green keeps saying.
David Green,
Lately, a lot. When a single family is taking a little hit, you still have the 2 to 4, then 5+. You know, diversification and in areas as well.
Correct. And when I say diversification, now, you know, I haven't listened to David Green on what he said. For me, it's because single family homes are residential properties. They are appraised and valued based on how much the neighbor's property sold for.
Yes.
2 to 4 units are, again, you know, they are in the residential bucket, but you do look at the rental income as well on a 2 to 4 unit property. 5 and up is completely rental income. Complete, correct? So if I build something or I rehab something into condo quality and I can charge condo quality rent in a A-class suburb, I'm stellar. Because now, you know, it's a very, important thing to focus is when I'm adding value with rehabs, especially in a gut rehab, I'm putting a lot of money up front. Now at the back end, I not only get the credit for the rehab I did, but I also get the credit for the rental income it generates. So that's kind of a double-edged sword that I've kind of stick with when it comes to commercial multifamily.
What's the biggest deal you bought?
19 unit in the south suburbs. We have all but 5 units now rented out. I bought this last year. This was Feb in 2022.
Also like complete rehab?
No. So this was more of a value add strategy. These were out of 19, I think 16 were non-paying tenants. So it was a building with,
How's the
lot of
area?
trouble. It's a pretty good, solid B-class suburb in the south suburbs. You had a lot of tenant issues, a lot of mismanagement. You had people who were not paying rent for 3 years.
Wow.
You had squatters in the building.
Well, how do you deal with that?
So yeah, I mean, I'm good in dealing with people. I try to get them out by offering them cash for keys.
Cash for keys.
Correct. That's been So I did that on 15 tenants, and just one is in the eviction court right now. And
So basically, cash for keys works.
cash,
You would say?
yes, cash for key works, but I don't offer cash up front. First, I talk to them. I kind of see what they want. Some tenants would probably you don't even need to offer them cash. They will just move out if you talk with them little. You just explain them the situation that, hey man, I'm buying this building, right? I need to rehab it. I don't want to be a pain in your butt. So let's work something out. And a lot of tenants would leave like that.
Yeah.
Yeah. With squatters, it's a little different because now you need to involve the the local police. You need to use a little bit of caution with.
But as soon as you're done with that, then you just go to work.
Correct. Then I rehab everything. Not to the level of gut rehab, obviously, because the building is never vacant 100%. So I always have cash flow coming in to cover my mortgage payments. So it's nothing out of pocket. But it has to be done with a lot of caution because I'm paying interest at 10%, 8%.
And how much was the price for that building?
So wow, this thing I got really lucky. This was completely off market. I bought this 19-unit mixed use in downtown Lansing, right in front of mayor's office for $700,000. 19 units, and out of 19 units, 3 of them are storefronts and 16 apartments in the back. So it's a big. Think of it like being 3 6 flats right next to each other.
How did you get the lead?
Off market. Baby, that's the name of the game, off market. But see, I was working with this seller for almost a year.
Yeah.
So people look at, 700,000. They don't look at how many times I went to talk to the seller.
Yeah.
How many times
How many sellers you talk to that don't end up to be
exactly.
And they don't end up anywhere.
And they don't end up anywhere. Exactly.
Would you say that there's a lot of people, probably like even higher than 50% of those that you talk to, they don't end up being somebody you make a deal with?
Yeah, I mean, see, it's exactly, it's all about numbers. Yeah, so 50% of, the leads I get through different sources. And a lot of it is, I have built relationships with a lot of commercial brokers, and they, a lot of times, send me leads. Hey, man, we tried to work with this landlord. He's not looking to sell, or, he is a distressed landlord. We typically look for, properties that are, valued at 5 million, 3 million, right? Do you want to buy this for less than $1 million? So that's another strategy. It's very advanced. It's very nuanced. And, it's a relationship building process.
And you bought also with the private money?
Correct. This one was hard money because 700,000 was a pretty big
I see.
chunk of change.
Okay, so you get the hard money lender.
Correct. Correct. With hard money, because
It's expensive. Yeah, a little bit more.
Not really. This was at 8%, but this was a year ago. Interest rates were different.
Yeah.
And I get up to 90% leverage. So I just put up 10% of purchase price and 100% rehab.
You got some good contacts.
Yeah.
90% loan, 10%, and then rehab they finance
100%. Correct.
Yeah, pretty good.
Yeah.
They just saw the numbers. They saw that the 19-unit building was 700.
Correct.
Can't go wrong with it. We'll lend you, no problem.
Correct. And this one appraised for 1.1 as is.
As is.
So I had 400,000 equity the day I just.
So you could have just bought it and then sold it right away, and you would make up 100,000.
Not 100. I mean 400,000.
Yeah.
Yeah, but see, the thing is, you want money today, or do you want cash flow for life?
Of course. No, you should keep it for sure. But for example, if you even wanted to just,
Sure.
sell it in 5 minutes.
So yeah, this one, bought it for 700. As is was 1.2. The back end ARV is around 2.2. So I did a 4-unit in, I think, 2020 in Oak Park. The moment I, bought that building, I knew that, hey, this is the, now I can scale up to 6 units, 19 units. Now I can go bigger, because that 4-unit was kind of, the transition.
Yeah. So now you are, what's your goal? 100,000 cash flow net a year, yeah?
Correct. I mean, yeah, and this would be, partly, it would come from 3, 4 different ways. One is, the new construction in Florida. Second is obviously Airbnb in suburbs of Chicago.
Yeah, you said you're doing Airbnbs. You start doing Airbnbs. Let's talk about cash flow. What's the difference between like how much money the single family versus, for example, the Airbnb? How much they cash flow?
So, I'm a cash flow junkie. When it comes to cash flow, a single family home typically, after I burr it, it would make anywhere from 450 to 750, 800, depending on how much I bought the house for, depending on how much I rehabbed it for, depending on how big the house is, what's the loan amount, what was the LTV I took, what's the debt service coverage ratio. So on a single family home, it's basically, from 450 to 750. On a 2 to 4 unit, it's 350 to 500, 600 a door. All right.
On a which unit?
2 to 4 unit.
2 to 4. Okay. 350 to
400, 450 a door. Correct. Depending on, the location of the property. Real estate, as you and I know, it's all about location.
Sure.
If something is in an A-class suburb, the cash flow for a 2 to 4 unit would be much higher. In a A+ suburb, you could basically rent each apartment at a condo quality per rent. So that's way more higher. All right. So on a 2 to 4 units, it's again, 350 to 550. On a bigger deal, like a 5-unit deal, all right, which is more commercial, it could vary a lot. It could be anywhere from 300 to all the way to 700, right? Again, based on location. Now, when it comes to Airbnb, it's kind of a little nuanced, all right? So there are 2, 3 different models. One is the short-term rental model, which is for rentals 30 days and less. The midterm is, it's actually 28 days, not really 30 days. It's 28 days and less. For 30 and up, it's a midterm rental, less than a year. More than a year is long-term all day long, right? Sure. So when it comes to Airbnbs, I net around 2,000 to 2,500 a month net cash flow.
Pretty good.
Correct.
But it's seasonal, no?
Now that's another point. Correct. So what I'm, again, it's a different strategy, right? What I do is when I do an Airbnb on a bigger single family home, I add kitchen in the basement so that come January, which is when, in Chicago, it's the slowest time of Airbnb. People don't like to travel. I get a lot of business travelers who would probably not want to live in a 5-bedroom, 4-bath house with 2 kitchens. I would divide it into 2 units, basically. So I would rent out 3 bedrooms, 1 bath, main house separate. And then the lower level, 2 bedroom, 3 bed, 1 bed, 1 bath, the second kitchen separately. So now I can cover, I can still make the same $2,000, $2,500 cash flow net a month.
You see, you said that the A+ neighborhoods, 2 to 4 units, cash flow more. I see it from a little bit differently. You know why? Because you buy off market, your prices are lower.
Correct.
When I'm looking as a broker and seeing what people are buying, the prices in A+ neighborhoods are so high, the cash flow, the higher, the better the neighborhood, the cash flow shrinks. The more the lower the cash flow, because our retail prices are higher.
Correct.
You're looking at the buying it off market. For distressed properties, your numbers are different.
Correct. Correct. Again, it's what you put into a deal.
Yeah.
To buy a distressed off-market multifamily requires a lot of upfront legwork. It involves a lot of, money out of my pocket. An appraisal for something like a 19-unit is $5,000.
Yeah.
Whether you close on it or not.
Yeah.
So it's a different mindset shift. And I think it comes with experience. Once you have done certain number of single family homes is when, you could transition into 2 to 4 units and then eventually to 5 and out.
You manage your own Airbnb? You manage your Airbnbs, or you have a company?
No, I do everything in-house.
In-house.
So I have in-house cleaners. I have in-house construction crew, an office staff now, which is basically a virtual assistant, if you will. And so, I manage everything myself.
I've seen a lot throughout the last couple of years, talks about syndicating deals, buying big complexes, anybody coming out of the woodwork and saying, I'm the city syndicator, give me the money, I'll buy the deal, What are your thoughts on that? Like,
So the way how syndication works is, I've been to a lot of multifamily conferences. I've talked to a lot of syndicators. I've talked to a lot of people who own a lot of real estate.
yeah,
The difference is in syndication, you raise capital, you deploy that capital on bigger projects, all right, for on behalf of your LPs. So it's two different teams. One is the general partners, people who do all the work, and then you had limited partners, who people who basically give you capital. The problem in that model is because that thing has been so hot for the last 5 to 7 years, especially if you go to markets in Florida, if you go to markets in Texas, if you go to markets in Phoenix. The problem is you're overpaying for such a big asset by a big margin. When the market turns down, you heard about it in Houston. I think there were 2 or 4 complexes that went into a sheriff's sale, and the bank lost, I think, $12 million. And
here.
yeah, so this was a thing that happened 2 months ago, actually, in the Houston market, and this was syndicator based in Dallas, and he just overpaid for those properties.
I'm predicting there's going to be a lot of that.
Correct. And then the other challenge is most of these syndicators have not owned real estate other than their primary home before jumping into syndication.
Yeah.
They have no experience of managing a bigger asset. And, they are basically capital raisers who want to deploy the capital. And it's a fee-based business at the end of the day.
Yeah, and then that's what they're looking for that 1% management fee.
Exactly.
Sometimes just for those fees,
Correct.
they would take the money and buy it into the.
Correct. Exactly. So yeah, I'm not a proponent of syndication. I would raise capital, pay every lender, a fixed rate, and that to me has been successful so far.
I think that eventually, as you grow, keep growing, you're looking for probably more challenge all the time, and maybe one day you're looking at 30 units, 50, 100 unit, 200 unit, and you start thinking, oh, maybe get together with some partners and raise some money. Maybe that could be.
Probably not, because the thing is, I don't want to share equity with anybody. See, I work very hard. There are days where I don't get sleep, right? And I love what I do. Obviously, that shows. I love what I do. The difference is, I would rather buy 4 50-unit buildings that I can own 100%, rather than buying one big complex and share equity with 50 different people.
Yeah, you hear these guys that own, like, I own 8,000 units, I own 20,000 units, but that's just owning a little portion of that.
Exactly. Correct.
They
And
just-
it's with owning 200 other investors,
Yeah.
correct? And then that's not a cash flow game. See, most, if you look at numbers, and I am a big fan of numbers, it's not a cash flow business at all. Secondly, whenever you do a syndication, it's a 3 to 5 year time horizon, right? I want to own real estate for the end of my life and pass it on to my next generation.
Sure.
If I am just, basically buying a property, selling it in 3 to 5 years, to me, it's a flipping on a bigger scale. Now, nothing wrong with it. There are people who make a lot of money, but that's not what I am looking for in real estate. I'm looking for, long-term cash flow. I'm looking for a generational wealth. I'm not looking for a 3-year or a 5-year exit like most syndicators do.
Yeah, that's what I've been seeing with the syndicators. I always thought that this is gonna be one day. It's just there's too many syndicators. Everybody's syndicating. I'm watching, once in a while I drive a car and I'm watching the podcast here and there, and then it's like the guy owns 7,000 units and stuff like that. Syndicating. This one's syndicating. Like,
Sure.
wow, so many. Like, it's just being a little bit
Insane.
ridiculous. Yeah. What are the best for somebody who wants to maybe start looking for off-market properties? What's the best way to go about it? Drive for dollars.
Sure. Secondly, there's a software prop stream.
Property. I've heard about it.
Yes, so that's a great tool for getting off-market leads. See, but a lot of times it's about off-market is a very it requires a lot of effort. It requires a lot of marketing efforts. It's a cash-intense business. A lot of times I would start with working with a wholesaler first. Try to see if, off-market deals is what you would want to do. And then probably start
How
with,
do you find wholesalers?
oh, yeah, you can go to any meetups. You can go to a lot of different.
Oh, by the way, mention that meetup that's going to happen sometime soon. The 3-day?
Yes. So the Andrew Holmes 3-day event is coming up in July. And it's a 3-day event. It's intense, education, networking, and a lot of different, strategies to scale up with multifamily and single family homes. We'll put the link below.
So go to meetups.
Correct.
That's where you meet the wholesalers.
Exactly.
Or you can maybe see the cash for, we buy houses for cash. You can call them and say,
Correct.
put me on your list.
Correct.
Those are wholesalers most of the time.
So those are bandit signs.
Bandit sites.
And I use that strategy. Now basically you're not a motivated seller who's calling a wholesaler. You are an investor who's calling a wholesaler. Correct. So you're trying to get to the same source of off market, which is a wholesaler. And then the biggest difference is I have 100% closing success rate. Meaning if I get a property under contract and if there is no issue, the seller doesn't back out, no issues with the title, I've always closed on a deal. So most wholesalers in Chicago know that I have a reputation of closing and, sticking with my word. I have no problems putting up 10, 20, 30,000 earnest money non-refundable if I'm serious about a deal. Because at the end, it's all about cash flow.
Okay, so wholesale is probably the best way because somebody did a little bit of research, found the deals, and
Correct.
they make some commission on that.
Correct.
I mean the fee,
Assignment
10,000,
fees.
15, 20, whatever it is.
Correct. Typically,
Depending.
assignment fees would range from 7,500 all the way to 30,000. I've paid 30,000 as well.
Yeah, because the deal is so good.
Correct, because the deal was so good and, there was a lot of meat in the bone.
Yeah.
And I had a strategic advantage. A lot of times I own another property on the same block.
Right.
So now for me, it's economies of scale. So I should have some kind of unique, advantage to pay a $30,000 wholesale.
And then what would be probably what's the other way? So drive and look for houses that need
Cold
work.
calls.
Bandit signs.
Correct. Cold calling.
Cold calling.
So when you get to PropStream,
PropStream is where you get the sort. How much is the PropStream?
$99
Per month.
Yes, it's that's the cheapest source of.
And then they have like a list where you pick neighborhoods, and then you can find
Correct.
a bunch
So
of.
think
How
of.
how do they pile up that list? How do they do it?
So they they are data integrators in technology world. They pull data from 50 different sources. They pull data from county records. They pull data from tax records. What you are trying to do is you're trying to get a list of, let's say, people who have not paid mortgages in the last 90 days, correct? So now they have a list pendants filed. A list pendants is the first step in the foreclosure process in Illinois, correct? You and I know that foreclosure in Illinois is a long, lengthy process for 3 to 5 years, correct? Yeah. So there's a lot of opportunity for investors like us to, basically buy properties pennies on the dollars.
And then what other PropStream has? What other indicators for? How do they make that list?
So they get records from different counties. They look at if someone has a list pendants filed. So you pull that list of pre-foreclosure.
So basically, that's the pre-foreclosures.
Correct. That's pre-foreclosures. Then you have tax delinquent properties.
Oh, they also have that.
Yes. So they have another bucket of tax delinquent properties. Then they have bucket for out-of-state investors. Mm-hmm. Then they have buckets for people who have city violations.
That's good.
So there's a lot of different
city violations. I think is a good list. No.
Yeah. But city violations take a lot of patience.
Yeah.
Because a lot of times these properties have a lot of distress, physical distress. Mm-hmm. Correct. Compared to a person who has not paid mortgage for 90 days, probably he's still living in the house. Probably all the utilities are still turned on. Okay. And there's not a lot of physical distress. So you're talking about different strategies have different exit points. and it's a different level of investing. If you buy a property that's been tax delinquent for 6 years and it's been vacant for 4 years out of 6, now you're talking about at least 80,000 rehab. So it's a different strategy with different properties. Each deal is different.
Yeah, but that's good, But first, if somebody's interested, you gotta start what's free, right?
Correct.
Yeah, start what's free. Talk to wholesalers. Get on all of the possible lists. Even if you go to Google and type in "sell my house fast for cash" or something like that,
Yeah,
there will be a bunch of links, and those are wholesalers most of the time.
Correct.
You can kind of get into their websites and figure out, or you can even email me, put me on your list.
Correct. Now, when you talk about free, what I did was when I was working in corporate, even now, I drive and I look for sale by owners,
Yeah.
a FISBO.
Yeah.
A lot of times these are overpriced, but every now and then you do get a motivated seller, a person, a family who had someone pass last week, and now they're looking to sell their house. Talk to neighbors. Introduce yourself as a community leader. I go to a lot of village events. I try to present myself as a community builder. Not as a cash-rich investor, but more as being a part of their community.
That's good.
Yeah.
What do you think your portfolio is worth?
Around, I think 15, 20. Once all these assets.
Did you think about that when you were in IT?
Probably not. Probably, it's one step at a time. I had never thought I would be laid off in the middle of COVID.
Right.
And I had no other option but to pursue investing full time. And,
Didn't think about getting another job in IT?
I thought about it for the first 4 or 5 months.
Right.
The challenge was the market froze. This was back in May of 2020. Everything was shut down, and it was kind of I was left in the middle of nowhere.
I think that IT right now is also not doing great, or is it?
Correct. No, technology because of a lot of things are being outsourced to India and China, and they're trying.
I see a lot of layoffs.
Yes, exactly. There are a lot of layoffs now because they have understood that people can work remotely, and when they say work remotely, they could work out of India and be same or more productive to their American counterparts. So that has kind of been a big force ever since COVID hit technology.
So let me ask you this now: what do you think is a personality traits that are helping someone to become a successful real estate investor? Like, can anybody do it, or is it something that you have to have in order to be successful?
This is not for the faint of the heart. I mean, there have been, a lot of different, kind of problems, challenges that I've faced in the last 5 years. Investing and anything in life, it requires a lot of hard work upfront.
Yes.
There are no shortcuts in life. I always believe that there are no shortcuts. And even if you try to take a shortcut, it would work once, twice, thrice, not all the time. It's a lot of perseverance. See, the thing is, I never give up. If I get hold of a motivated seller, I would chase him till the last minute. Like, I would go door knock on his personal residence. I would go door knock if he has an office. I would go door knock on the tenants, try to get more information from the tenants, correct? So you never give up in life. And I had the same attitude, same personality, even when I was in corporate America. I used to travel 5 days a week before I got married. So it's a lot of work.
The most important thing is to be...
Never give up.
Don't give up. The work ethic.
Correct.
And keep pursuing it.
Correct.
Do you have to be good at people skills?
Yes. I mean, people skills, real estate is a team business. Even you run a pretty successful brokerage office, correct? It's dealing with a lot of people. It's dealing with fellow agents. You have a pretty big, substantial team in the office. It's dealing with a lot of buyers. It's dealing with sellers. So real estate and investing, investing now you're dealing with contractors. I have a full-time construction crew now on my payrolls, correct? So it's dealing with the contractors. It's dealing with subcontractors, people that I sub out certain pieces of my rehab, correct? It's dealing with obviously motivated sellers, correct? And now the biggest difference is, Oleg, 100 times easier to get a house, a single family home under contract from a motivated seller. Because the thing is, he has kind of given up on the house. Okay? He has financial difficulties. Okay? Apart from the house. So now it's easier to buy the house, using the different strategies we discussed about hard money lending or private money. And you just, fix it up, and then it would be worth, 250, 300,000. Now, when you're dealing with the 2 to 4 unit space, you're dealing with typically 80% of times it's mom and pop investors. Still, it's difficult, but not as bad. These people could again have some financial issues. A lot of times it's, difficult tenants. I deal with tenants who have probably, they have a criminal record. They have been in, gangs. They have had, criminal activities in the past, correct? So now that's a different strategy on a 2 to 4 unit. When it comes to 5 and up, the same prop stream doesn't apply.
Yeah.
Those people are very sophisticated, meaning those people have made money with that property in the past. Something happened either in their personal life or with the property. COVID was a big factor, with the eviction moratoriums we had in Illinois. Right? Now you're talking to a person who's probably not a distressed homeowner, So that's a very different strategy. It's way more complex to buy a 6 unit, a 19 unit directly with the seller compared to a single family.
Sometimes when it's a very distressed property, are you afraid of going in? I'm like, I don't know what to expect here.
No. I don't. And there's a big thing. I do a lot of due diligence up front, whether it's a single family home, 2 to 4 or a 5 and up. And when I close on the property, see, if you are a sophisticated investor, you need to have more information than the previous owner. That's the trick. Because if he had all the information that you have, how would you basically, you need to think like a private equity fund. When a fund buys, they do so much due diligence more than the previous owner of that company that now they are able to come and turn around the whole asset. So when it comes to a 5 unit, I think I put my private equity hat and I think like, a private equity investor. I look at the due diligence is different in an off-market 6 unit or a 19 unit. I look at rent rolls. I do a lease audit. Right? I look at the operating expenses for that property. How do you get the rents up? How do you lower the expenses? Right? So it's a way more complex, and it's a way more difficult strategy to adopt.
You enjoy multifamily more than single family?
All day long. All day long. I like multifamily because of 4 different things. One is it's multiple streams of income from one asset. Secondly, when I buy a multifamily property and I rehab it, I'm getting the advantage of not just the physical rehab I do, like if I would paint, right? I'm also getting the benefit of higher rents, which equates to higher NOI.
Yes,
right. When down the road, when I do a refinance on a multifamily property, I'm able to get the advantage of, let's say, a 19 unit. Now, 19 tenants are running on a treadmill to pay your mortgage down. So I can do accelerated payoff way more faster in a 19 unit compared to a single family home.
You mean the cost segregation?
Cost segregation is one thing.
You're talking about
if I were to pay
reduction.
off exactly. If I want to pay down the principal or pay off.
Yes,
the principal,
of course. Yeah, if you look back,
faster.
Every year it's there's so much in principal reduction.
Correct.
Yes.
Correct. And last but not the least, from a property management standpoint, it's way more easier. It's like going to a single family home because now I'm going to one 19-unit building.
Yes.
to do something. Now I'm going to one 6-unit building
For sure.
to take care of something, correct? So from an ongoing property management and asset management standpoints, easier, less stressful, and I think that's been the game changer for me. Multifamily.
You think you're gonna keep doing that for the rest of your life?
Absolutely, the day until I die.
And then you're gonna have lots and lots of units.
Hopefully, yeah. Hopefully, it equates to, see, it's all about this is my passion.
Right.
It's this has been my passion, to become an entrepreneur, to be my own boss. Okay, I luckily COVID hit. I got hit by COVID personally, so I was in the bed for a month, correct? But this whole transition changed my life upside down.
Yeah. I had COVID a couple times too, but not for a month.
Mine
couple
was
days.
severe. Mine
Really?
was pretty severe. I was hospitalized, and this was at the peak of COVID, right after I was laid off. And that
Wow,
1
that
or
was,
2 months, that was kind of brutal.
No job and
No job, now.
sick for a month.
Correct, exactly. Sick for a month, in hospital for a week, and that was a big. That was when I was thinking, hey man, now I have to change my life. I don't want to be dependent on an employer. I want to be my own boss. So that mindset shift happened, when I was laying in the bed for.
Did you know the real estate's going to be the
yes, because I was already doing real estate from 2019 for a year and a half.
That's right.
So this was.
This was the moment to shift. Yeah.
Exactly.
Okay, Sean. Thanks so much.
Yeah.
Thank you everybody for tuning in, for watching. If you want to connect with Sean, what's the best way to?
LinkedIn.
LinkedIn.
Yes, I'm on Facebook. We can post the link down below, and I am happy to answer questions. Oleg, I appreciate the opportunity.
Yeah. Thanks so much, Sean. Thank you. Thank you guys for watching. See you next time.
Thanks.
So the best thing about working in Komar is the very motivational and inspirational environment.
Whatever you need, whatever question you have, there is always support, no matter what time it is.
The communication with all the team and the managing broker, Oleg, he's available all the time.
Everyone is super excited and passionate about real estate.
And it's new dynamic company with lots of new excited agents.
We have a great team behind. If you're a new agent, you'll got a lot of training. I'm doing training myself. I have a team of the agents who from the beginning learning from the open houses, from the showings, from the inspections, closings, going with me. I'm sharing my knowledge. If you're already in a business, you will have huge resources.
So far, it's a great experience for me as a new agent. It's my first year in real estate. I appreciate what they're doing. It's like I never seen it before.
One of my favorite things about Komar is our Friday meeting.
We discuss what's going on the market, what are the prices, how to negotiate.
How we learn from each other's experiences and learn from each other's mistakes.
We are really well educated.
A lot of new content, a lot of new information that you can learn and just improve your professionalism.
I enjoy working here because I get to grow my brand, yet it still feels like I'm part of the team of something bigger. We get to share our ideas, we get to bounce things off of each other. So even though it's my own brand, I still feel like part of the big team.
The whole culture in Komar is really great, especially if you are new or experienced agent.
You can grow on your own team here. If you already have some knowledge, you have some sales behind you, you can bring your agents. There is no ceiling at the Komar. We have really clear split commissions. So no fees, no extra charges, no printing fees or something like that. You will know how much what your split is going to be, and the more you sell, the better your split is going to become.
All right, you've heard enough. Join Komar.